Test. Okay. Oh, sorry. Wow. Sorry about that. Okay, we should have sound. So, one of the members in our group is working on a study, and it's the 200 EMA and the MACD. So, if gold's above the 200 EMA, you're only looking to go long. If gold's below the 200 EMA, you're only looking to go short. And what you do is use a cross down here. So if the blue crosses above the orange like this, you would take a buy signal. Okay, that's your buy signal, and you would get in long. So again, the blue crosses above the orange while gold is above the 200 EMA. You're looking to go long. Okay. Now this cross can happen above the zero line of the MACD, which is what happened here. This is the MACD. This is the zero line, or it can happen below the zero line of the MACD. Doesn't really matter. As long as gold's above the 200 EMA, that's when you're going to buy. Now, I've already marked up the chart from earlier this morning and shared it in the Discord of what I believe should happen. 3-minute time frame. I wouldn't trade on anything less, or you get totally mixed up signals on the MACD. They're just everywhere. In, out, sideways. You're going to get a lot of bad signals. So I don't recommend going lower than a 3-minute time frame. The other thing I noticed, and that's just on today, this is going to take some back testing. So on today, what I noticed was that if you had this happen, if you had a cross on the MACD signal lines, but it was above the MACD center, it was a short move. It went in your direction, but then it reversed. Okay. So, word of caution. So, I would say that's a riskier entry. Okay. Still a good entry, but riskier. Okay. So, less contracts or close your partial out quicker. Okay. If the this cross happened below the center line of the MACD, then you got a further push. You got more of a move. So a safer trade. So I would consider that if gold's above the 200 moving average EMA and your cross is below the zero line of the MACD, then or center line, then it's a safer trade. Okay, than if it crossed like this above the center line. Now we're in replay mode. Guys, I'm sorry, but I was trading on standard this morning. So that's what it's on. I do not have it on micro. I think he's trading micro. So I'm going to go over this as a standard. I'm going to be putting 3 contracts on as I go. Just adjust it. Just take off a 0 as I do it. If mine says 200, it would be 20. Mine says 420, it would be 42. Okay. So just make that adjustment as if it was being traded on micro. I've already got the vertical lines marked. I'm going to tick over. I'm going to try and talk kind of fast and make this not a long video. So there would be your entry. You see we have a cross on the MACD. It's above, again, the center line. So all I'm saying is when I say riskier trade, I just mean it's not going to tend to move far. Okay, from what I've seen, again, that's on today. You've got to go through and back test this. The other thing is stop management. So let's go ahead and buy 3. Okay, so I'm in 3. Stop. Where do you put your stop? Do you put it there below the current candle, or do you go 1 candle back, or would you go back past the lows? This is a personal preference. Now mine says 1200. Okay. Again, 3 micros would be 120 or 81, or if you went to the current candle low, it would be a $42 risk. Drop a 0. Okay. So again, stop management, that's something you have to decide yourself. Where are you going to place your stop? If you do decide on you're going to place your stop here below the current low, then you do it every time. You don't change it back and forth. If you're going to place your stop past the previous candle, then you do it every time. As far as risk to reward, you guys know I'm big on you don't know your risk to reward. You know what you want, but you don't know what you're going to get. Okay. So I could risk $66 here. Again, micros drop a zero. I could risk $66 and it may go up 50 and I need to close. Doesn't look like a good risk to reward ratio. However, when I got in, do you think I'm getting a $66 risk and, hoping only to get 50? No, I'm hoping to get twice that, okay? I'm hoping to get 120, 130, okay? That's my risk to reward of what I want, but that doesn't mean that's what I'm gonna get. So there's I don't wanna say there's a lot of confusion in risk to reward ratios, but a lot of people throw that around like it's gold. It's a brick. It's a written in stone. So it is. I like to be a trader that makes at least 2 times my risk, but gold may have another opinion on that. Again, I'd be a trader. I'd love to get 1 to 4 every time. Risk 200 to make 800 every single time. That's my risk to reward. I'm gonna be disappointed. I will be disappointed because I won't get 1 to 4 every time. I will get what the market gives me. That's the bottom line. You get what the market gives you, not what you want. So when you look at risk reward, this is where you need to look at it here. Where are you putting your stop? It's your stop management. Do you put it back here? You put it under that? You put it under current? What I would say is if you're trading on a smaller time frame like a 3 and you're gonna use this, close 3 candle in, that's what we're gonna do here. We're closing on 3 candles. 3 candle tick, we're gonna close whatever it is. We get what we get. We don't throw a fit. We're gonna move our stop to break even. What I recommend is if the candle's decent size like this, go ahead and use it. Use your stop below that candle. If the candle's really small, like one of these, definitely if it's like a little doji, use the candle before it. And if it was this one, that candle before it's kind of small, just go back to a bigger candle. Now, if it's like this candle you're getting in on, use that candle low. If it's this candle you're getting in on, use that candle low. Okay. But if it's a real small candle, again, don't use it. Go back to one. So we're going to use the current candle. We're going to take 3 candles in. That's it. We're going to wait for it to close. We're going to close. So placing my stop here, I risk $42 to make 42. That's a 1-to-1 ratio. I'd be happy closing part of my trade there. Again, not the best scenario, but this is the strategy we're doing. We're closing at 3 candles in. That's it. And we're going to close off partial. So we need to adjust this down to 2 and hit sell. That closed off 2. We locked in $28. Remember, drop off a 0 if you're doing 3 micros. You locked in 28, and right now we're still at a 1-to-1 on this. We're risking 14 to make 14. I mean, that's where we're at on it. But if you move your stop to break even, you move your stop to break even. Okay. So right now we've protected our gains. We've locked in that. We're not going to lose anything. And we got stopped out. So here's something to pay attention to as you're going back and um, looking back in the past, testing these for data. Here's something you want to look at. When you got stopped out, was that the best place you could have got stopped out at? Did you miss out? The other thing to look at is did you miss out on more of a move? So 2 things we want to watch now as we tick over. We moved to break even. We protected our capital. We had 28 locked in, moved to break even. We didn't lose anything because if we would have left our stop where it was, well, if it backs further down, we would have lost something against the gains. So if that is your strategy, you stick to that. 3 candles, close. Close 2, move stop to break even in case it moves further. If you get stopped out, you get stopped out. Don't say to yourself, "Well, I get stopped out this time, so next time I'm gonna move my stop past the previous candle." Back test this and make a decision and trade that decision for a week minimum. I suggest a month, but a week minimum. Don't switch back and forth every day. Do it for a week and then analyze your trades at the end of the week. Did that work out in the best scenario? You got the luxury of having this replay tool in trading view. Why not use it? Okay. Make sure it's in your time window and use it. So again, we're looking for two things. Did we get stopped out in the best position? Okay. We protected our capital when we got stopped out. I'm happy with that. Second thing we're looking at is, did we miss out on any of the move? Now we closed out up here. We closed partial there and we didn't lose anything in our runner. So as of right now, it's up above there. Does that move continue long or does it turn and go short? It turns and goes short so far. Now, trading retracements. I don't recommend this, but I want to mention it here on this um, in case you'd like to try it. The trend is up. Gold's been up. Gold's been up for, decades. It just keeps moving up and up and up, making higher highs. I wouldn't trade against it. However, if you do want to trade retracements, that you can use this signal down here. That blue cross below orange, which means pullback time. I don't recommend trading retracements till you learn how to take your entries and trade with the trend in the first place. So we're trading long if it's above the 200 EMA, which it is. So we're only going to go long. So again, I do not recommend trading short. However, if you wanted to, you could do that. Do one contract. Don't do three. Don't trade with the same amount you trade in on trading with the trend. If you're trading 3 long with the trend because it's above the 200 EMA, don't do 3 short against it. Okay. Overall, at the end of the week, you're gonna lose. The reason why I'm pointing this out is because I know some people are trading that, and I want to point out this in particular right here that um, ah, that right there is a cross with the blue below the orange. Okay. Short signal, retracement. It's retracement time, just like over here. But do they go anywhere? No, it didn't. So trading retracements is riskier than anything you could ever do. Again, right here, there's a cross. Someone would say, "Oh, retracement time. I want to trade the pullback." It doesn't pull back. Losing trade. Same over here. Okay. Right there. Right there's a cross, blue below orange, retracement time. Guess what? Sideways movement, pull up, you lost. There's 2 losing trades right there trying to trade retracement. I don't recommend it until you've been trading for a very long time, until you're successful trading with the why trade against it if it's riskier? Trade with it. Okay. You're gonna see several red lines marked. So there's the pullback. Till we get a yellow line come up that we know it's a possible signal. So look at this overall. This is your data right here. This is all data on the trade, not just this. This is not your only data right here, where you got in here, 3 candle closed, move your stop to break even. You got closed out here, didn't lose a thing. That is not your only data. The rest of your data is right here. Now, again, I've marked this yellow line as the next cross. I pre-marked them. So until we get that cross, we're not doing anything. This is your data. Okay. Did we get out at the best possible time? Yeah, we got out at break even. I would rather get out at break even. I'd rather get out and profit on a runner, but I would rather get out at break even than a loss. So we got out at break even here early. You were only in this for 4 candles. That's it. 12 minutes. 12-minute trade. Now you're waiting. You're waiting on the next signal. Okay. So you were only in it for 12 minutes. You got in, closed out two, three candle close, and then got stopped out on the floor. You're only in it for 12 minutes. So, two things to look at. Did you get out again at a good position? Yes, we got out of a good position. We didn't lose anything against our gains. So we locked in $28. We didn't lose any of that because we moved to break even. Two, the second thing to look at, did we miss out on a move? No, we did not. It did not go higher, went a little bit higher, but did it give a leg, give a push, an extension past this high? No, it didn't. So we did not miss out on anything. Great trade. To me, that is a great trade. Got stopped out, break even, didn't miss anything. There's nothing to kick yourself about, like missing a move. All right, so here we got a green candle. Green candle entry because we have a cross here. We're above the 200 EMA. Boom, that's when we're in. We got to change this over to 3. We're going to buy 3. That candle's long. We're entering on, so pull it down there below the candle. I'm fine with that. I would not use the previous candle. That's going to put your stop out there quite a bit. Again, if the candle's kind of long, it's okay to use that candle. If it's short and stubby, then go back. Go back a little bit, okay? I'm gonna tick over 3 candles. That's it. There's 3 candles, and we're closing. So again, if you look at risk reward, where we put our stop is we had to put our stop there. We're not using a set in stone stop of like 42, okay, which would be where? About the bottom of that 45. We're going below the candle low, okay? Go below it. So doesn't look like the best risk reward. Again, we cannot control that. So we have to close out 2. We just sold off 2. We're going to move to break even. Now we're protecting our gains. So now we're up to 58. We'll just tick it over. We're stopped out. We got stopped out in here. So again, that's our data right now. 3 candle close. We closed out in profit. Now, guys, you're going to look at this and go, well, why wouldn't we? If we would have just waited till that 4th candle, it ticked up there. We could have closed while it was high. Well, it closed here. We're waiting on candles to close. So you would have closed at the same price. And you could look back and say, well, I would have closed at candle 2. Would you? Then you have to say back here you would close at candle 2. You would have to say at every trade you're closing at candle 2. So you don't know what's going to happen. Just we're making rules, we're sticking to them. I chose 3 candle close. 3 candle close. We lost a little back as it pulled back, pulled our stop to break even. We got stopped out here. We lost nothing against gain. So again, here's a red line. We would not be trading a retracement. Okay. You'll see that this trade of retracement worked, but remember the first 2 I showed you did not. So it's a lot riskier. You'll see it. Sometimes they work, sometimes they don't. So we'll tick over to where the next vertical yellow line is because that is where we're going to get across. Again, I pre-marked them. So here's your data. This is your whole trade data right here. Not just here where we got it, closed partial, move, stop to break even, we got stopped out. Remember, 2 things to look at. Did we get stopped out at a good position because it did not move further after we got stopped out? Further up. Yes, that's what we look at. Those 2 things in combination. Did we get stopped out? It pulled back to stop us out. Did we get stopped back or get stopped out in a decent location because it never moved further up after we got out? Yes, it pulled back, stopped us out. It never went further than this high. Did we miss anything? No, we did not. This is how we're analyzing our stop placement, move to break even. Was that the best choice? So far on the trades we've done, what is it? 3, 2. So far on the trades we've done, moving to stop to break even has been a great way to manage our trade. Closing the partial 3 candles up and moving the stop to break even so far has been great rules for this strategy. We've protected our loss against our gains by moving stop break even, but we've left that runner on just in case it breaks and runs. So far we haven't had any runners. but we haven't had any losses against our gains by moving to break even, and we're up for the day. And we haven't missed any of those extended moves. So far it looks great. All right, there's our candle entry. Gold's still above the 200 EMA. We have a little cross. The cross is right around the center line of MACD. When what I've seen is the further the cross is below the center line seems to be more of a move. The closer the cross like this is to the center line of the MACD seems to give a short move. Okay. So we're going to enter with three on a buy. Stop. What do we say? Where's your stop? Again, right there below this candle, kind of tight for me because that candle is small. So I'm going to move it past this wick. I'm going to the next candle is it. So I'm risking 60 on this. So again, that candle is kind of small to place a stop on. So I'm going to go back to previous. If that was a bigger candle, if that was this candle, I would have used the low. Okay. 3 candle close. Okay, there it is. There's 3 candles. So my risk ended up being not my targeted risk to reward. My target risk to reward is always going to be higher. My risk to reward ended up being risk 60, got 93. Okay. We're going to close 2 and we're going to move stop to break even because that's what you're doing. Okay. We'll tick over. We've closed. We're going to tick till it stops us out or gives us an extension. I see a red line. What does that mean? Again, means it's going to pull back further. So we got a cross on the MACD here, which typically you get pullbacks on. Not always. We saw over here before we start taking trades, the first 2 trades we didn't take, but the first 2 crosses like this, where it was against the uptrend of the 200 EM, it didn't go anywhere but sideways. So just because we have this cross doesn't mean it's going to go down, but it means we're in a retracement period. So it could just be a sideways movement. That's something to keep in mind. So again, don't trade that. Don't take it as a signal to trade short. Right now, what have we done? We closed out profit. We locked in 93 on 2 of the well, we were up 93. We closed out 2 of them, and we have 1 on at break even. So right now we've protected against any loss against our gain on this trade. So right now, overall, it's been a great trade. We got in 3 candles over, closed out 2, left 1 on in case it decides to break and run. However, if it pulls back, we're just gonna look for another entry to go long. As long as gold's above this moving average, we're gonna keep taking it long. Okay, so we have 1 on. It is protected against any loss. There it is, out. So again, I'm gonna tick over. When we get the next yellow line, you'll see there's a trade coming up. Okay, so we have a potential trade coming up. Again, just because I marked that early, you wouldn't have known. But when you see these coming closer and you know you're about to get a possible cross to go long, right now we would have to think short because gold is below the 200 moving average. So something to touch on here, gold's below the 200 average. You'd be looking to take it short. However, these would need to cross. Your cross would have to look like that. It would have to be a blue line that is previously above orange, would cross below orange over here to signal short. So right now, you're not thinking anything, long or short, because it went below. Go below it, go below the 200, you'd have to think possible short, wait for a signal, which would be off these 2 lines. So right now, you're not doing anything. But again, your trade data is not just this. It's not just we closed and we got stopped out. It's this over here too, the rest of what happens afterwards. Did we get stopped out in the best position? Yes, we did. We moved to break even. We got stopped out at break even. We didn't lose anything against our gains. Okay. If we would have left our stop where it originally was, which was down here, guess what? You would have made a loss against your gains. So did we get stopped out in a good position? Yes, we did. because we coulda left it and lost some against our gains, but we moved it to break even, didn't lose anything against our gains. So, yes, by moving our stock to break even, that was a great decision, and we locked in a positive trade. Did we miss out on any potential move, further push up? No, we didn't. It never went up. Never went up to break the high, okay? So, great trade management, great trade, another one in the books. Okay, so gold actually crossed back above the 200 EMA, and when it did, because I will tell you, that is what is making these moves down here. MACD is not a be all signal, okay? So what made this blue line pull up here and cross above the orange is this move up, okay? So this move up right here, those candles up, is actually what made this blue line come up and push across, okay? This is not predictive, okay? It follows the move. So that is our signal though. We're gonna get in, pop it up to 3. Do a buy. Where's our stop? Well, we have a big green candle, so we're gonna use it. Big candle, we are not going to the previous low. We're gonna use that. So we're risking about 51, 52. You know, you guys can pop it in there. It's gonna be up to your discretion as to where you place the stop or the signal. 3 candles over, we're gonna close. That's it. 1, 2, 3. So look at our risk to reward. Turns out being a great trade. It's a little better than 1 to 1 using that candle low. Could you use the middle of the candle? I wouldn't. I would never use the middle of the candle. For me, it's gotta be the candle low at a minimum. So our at risk ended up being $54 to make 75. That's what we're up right now. If we closed it all, we close it all. Great trade management. We just 3 candles, we're closing profit. Okay, another good trade, better than 1-to-1 risk ratio. Guys, you guys can do this all you want, but as we've looked at this, the best bet is not for me to move the stop to break even on the whole trade. It's just not, because as you've seen, we get stopped out a lot, okay? So it's just not best to move the whole thing. It's better typically to close, and we're gonna close 2. So we close 2 off, and we're gonna move the stop to break even. Now, we know that we've been stopped out several times, but we also know, as you look back at your trades, 2 things we know. We know that every trade our runner has been stopped out, but it's been stopped out at no loss. We're leaving it on for that chance that it's gonna keep running, okay? So we know that every trade we've left a runner, no successful runners. I'm okay with that because it's no losses against our gains, all right? And, also, we know that it's never pushed up to make a higher high, okay, after it's taken us out. So right now, that's been a great decision, looks like. Tick over, we've already closed 3, pulls back, pulls up. So here's where a lot of traders will kinda kick themselves. What do you do? If we woulda got in with 3 contracts and closed out all 3, profitable trade. It's pulled back to make a low, pulled up, extension up. So it's extended. We do have a runner on. Here's where the runner may play out to lock us in some profits. Well, let's move our stop up. You wanna move it there, below the low? Do you wanna move it here, below the swing candles where the candles close? That is gonna be entirely up to you. But now we have a chance. We have a runner on, we have a chance. Now this high just popped above this high. So we don't know. Is it gonna turn? Are we gonna get anything out of this runner? Right now, we're only getting $8 out of it. So again, it depends on how aggressive you wanna be with the runner. Do you wanna move your runner below here and use that high and say, "Well, it wicked down right to that level. You wanna use this level right here as support, and hopefully that'll hold up over here." And do you wanna move your stop in between? in between, this swing low and that. And you would be locking in 23. I don't know where you guys want me to put it. This is up to every individual trader. Again, this should be decided something like this should be decided ahead of time, but you can move it up and then be like, "Wow, I don't know. I kinda like the idea of moving it here," and using this as a level of support. And hopefully that holds up. I'll take the extra 21. Okay? Again, it's gonna depend on each trader. Everybody's a little different. Took it over. There's a nice push up further. So it pushed even further. I would be okay with moving your stop. I'm not gonna use the current low over here, kind of a sloppy low, okay? I'd move it up, keep it somewhere in there. See a red line come up, you know what that means. Alright, so we're gonna it's gonna pull down. We're gonna close out 24 on that bonus. So that's our runner. We locked in a little bit on the runner, okay? So now we're gonna tick over, and we're kinda being able to cheat because you see a yellow line come up. So we're not in yet, but again, look at all the data we have here. You wanna look at the data between entry and entry, and if you guys take trades and you trade them live, well, then go put your executions back on your chart, okay? Do it to where you can see your executions on the chart. You'll see these very same things. You'll see a buy of 3, a close of 2, a close of 1, okay, on that move there because we moved our stop in here. And so, did we manage our stop well? I think we did. Originally, we got in 3 candles, we closed 2, we moved our stop to break even, we weren't gonna lose anything against our gain. However, when we had these legs up, when it pushed up, we went ahead, moved our stop below here. When we had a further push up, we moved our stop about halfway in here, keeping these highs right here, keeping these candles in there as a level of support, and yeah, we got stopped out. We got stopped out on our 1 runner. We banked a little bit on it. Not a lot, but we banked a little bit, okay? Look at the rest of the data. Did we get stopped out in a best place we could? I think so. Sure, we coulda closed out up here somewhere. You remember I said someone more aggressive might their stop below, the sloppy wick here down? You woulda got slopped out. You woulda got stopped out, a little bit better, not a whole lot, a few ticks. So, um, but look what happened after. It fell apart. It came down, okay? If you're looking at trading retracements, yes, this woulda worked. At that cross, you coulda closed your trade long and got in with 1 contract short. Remember, we're doing 3 contracts long. It's above the 200 EMA, that's our best bet, go long. 3 contracts on a trade long, trade short 1, and I don't care how you manage them. You could do 3 candle close, whatever you wanna do. I don't recommend, again, doing this. I just wanna show you the retracement side. This cross right here, where the blue crosses below the orange, means that it is a possible retracement. That means either pullback or sideways movement, one or the other, pullback or sideways movement. In this case, a pullback. Move below the 200 moving average. Once this candle closed below the 200 moving average, you would think short only when the blue line crosses down below the orange. Well, that already happened. It's bound to not happen in here, okay? This line would have to move up above the orange and then cross down below it again to get a signal. However, that's what we get on the next candle. It pulled up above the 200 EMA. Now the 200 EMA is flat. I don't like that. I'd rather see it pointing up. But the 200 EMA is flat, but we're above it. Gold's above it. We get across. We're going to stick to the rules. We're going to buy one. Where are you putting your stop? You can use this candle. It's kind of small. Remember most of the others. I mean, if you look at the price right there, it's 27. Remember, drop a zero for micro, 27. So to me, it's kind of tight. So I'm going to use the next One down, it's around 50. I think most of our stock is around 40 to 60. You're doing what they were, 40 to $60. You're doing 3 micros. So that's acceptable. 3 candle close. Bam, bam, bam. Where's it close? That's it. Risk to reward does not look great. We're risking 51 to make we made 21. We don't know what we're gonna get, so we have to get what we get. We don't throw a fit. Do you wait for another candle to see what happens? Well, that's not our rule. What's our rule? The rule we established was 3 candle close. Where are we at? 3rd candle. What must we do? Close. What must we accept? We must accept that if we close, that's what we get, the $21. If it moves, the next candle moves up and is green, guess what? We just missed part of it, okay? That's part of the we get what we get, we don't throw a fit. We never know. Risk to reward on this? Well, what did we risk? So we risked $51. We got in here. Where was our reward? I can guarantee you if you're drawing the position tool, okay, you put it on there, but you stop down here, where's your target? Your target's up here. Our target is up there. So again, when you look at risk to reward, there's 2 different ways you're looking at it. Some people ask, "Well, what's your" all the time I get at, "What's your risk to reward?" Well, do you want the risk to reward that I shoot for, or do you want the actual risk to reward I get? Because they are 2 different numbers. My trading strategy, well, my risk to reward's never 1 to 1, and it's never upside down. If I got in this trade, I'll go ahead and mark it. So if I get in this trade, where's my risk? Where's my risk? Where's my reward? Up here, the inside top. Does that look good enough to you? Yes, it does. Okay. That's a good risk reward right there. Just look at the risk reward levels. That's a great risk to reward. However, we're not getting that right now because our rules are 3 candle close. All right. So I'm going to close out 2. So again, risk to reward is, what you want to call it. It's not always black and white. My risk to reward on my trades is phenomenal. What I risk to what I shoot for, what I'd like to see my reward be. However, the market doesn't really care. All right, so let's see what happens. Nothing much. There's a candle up. So if you would have waited, for one, you're breaking your rules. So as you back test this, you cannot sit there and say, "Oh, wait, well, in this case, being that that was a big red candle back, I would have waited 2 more candles." You can't say that. "Oh, I forgot to move my stop to break even. Sorry, guys." Stop should have been there. It would not have been taken out on that. But you can't say, "Oh, I would have stayed in 2 more candles at least before I closed," because we closed out on a pullback. You can't say that. If you make a rule, you stick to the rule. Because if you say, "I would have waited 2 more candles on this," would you have locked in more money? Yes. Look back here. This is where we closed out partial. If you said here, "I would have waited 2 more candles," what would you have said here? "I'd wait 2 more candles after that." You're getting in here. So you would have lost money here. Okay. So again, you can't bend the rules. You have to make a rule and stick with it. And this is what I've seen so far is when we get that good bullish candle, okay, we get we get a bullish candle on a cross of the MACD. It tends to be 3 candles before it starts to pull back. So lock them in at 3. Again, entry candle green, cross MACD, boom, 3 candles. We go back, same thing over here, entry candle green on the cross of the MACD, 3 candles, close. That's the rule, all right? So we're at break even. We're looking for an extension up. Is that a good enough extension to move your stop? Okay, so let's talk on this. This high pushed above this high. So we kind of formed a low in there. Where are you gonna move your stop? We're already at the low. I mean, you can do something like that. but we wanna keep it past swing low. It'd be real aggressive if you moved it halfway up. Remember we talked about that on that last trade, moving it halfway up. So, you move halfway up between the low and this little high in here. You could do that, but if you do that, you set that rule up and do it every single time. If it pulls back, pushes a little leg up, you move your stop halfway up, halfway to the that high. Same over here. You would move your stop halfway too high. Again, if you choose to do that, you do it every single time, okay? That's a rule, but you make that rule for yourself. You'd be stopped out right now, but that would be okay. You locked in some gain. We're still in, there we're out. So did we protect our trade? Yes, we did. So we protected our trade. We're gonna look and see if it goes any higher. It does go a little higher. So where would we have had to have our stop to stayed in this? Again, this is data you wanna look at also, not just here, get in, because we had our cross, 3 candle close, close, a little bit of profit, not much from where we got in, and then we moved stop to break even, we got stopped down. Nothing, no loss, small trade. This was a really small trade. How could we have stayed in to possibly capture more of the move? The only way you could have done that is if you had your stop below this candle and never really moved it, okay? That's the kinda stuff you gotta look at overall. Because there's another push up. So again, as you look at this, don't kick yourself for missing it. It's not within our rules right now. We would have to modify our rules to have stayed in this, our runner to stay in. The rule modification would be where our stop is, okay? Our stop, I can't remember if we put it there below the previous low. I think we put it back here below the previous because that was small. So that was our stop, 3 candles we closed, we moved our stop to break even. The only way we could have stayed in the game is this if we kept our stop where it originally was, or you use your 200 moving average as your stop placement, and you move your stop off the 200. I got the magnet on, sorry. Keep your stop below the 200 moving average, okay? That's the only way we could have stayed in. So, we would miss out on the run. So, as you analyze the whole trade, did we get out at a good position? Yes, we did. We got out at a break even, okay? We got out break even. I'd rather get out at break even all day long than a loss, okay? Did we miss part of the move? That's the second part. Yes, we did. In this case, we missed our run. Sorry, we missed our runner, okay? So the runner, it pulled back here. The cross of the MACD would be your signal to close the runner. So, or you get stopped out moving your stop. So could we have locked in more gains? Yes, we could. How much? That remains on what you use as far as your stop management. If you close the trade when you get this reverse cross on the MACD, then you would have closed here. That's your price line. Well, we closed here. So yes, you would have locked in more on that stop. How would you have moved your stop? If you would have moved your stop below a low, new low here, below a low, and never moved your stop up here, well, then you would have been stopped out here, okay, below this low. As it pulls down, if you draw a line across that, yes, you were still close out in some gains. But the only way to have done this, the only way to have stayed in this is to have left your stop where it originally was. Then when it made another extension up here, pulled back, another extension made making this low, move your stop of that low. You would have had to waited. Count how many candles it is, all right? There's like what, 15, 20 candles in there? And we know here's 3. So there's 19 candles to this push up. So you would have had to wait 19 3-minute candles. That's almost an hour before you moved your stop. Is that within your trading capability? Can you stomach sitting through the pullback? 'Cause you would have been in the negative a little while. These are all things you gotta look at when you're thinking about this and analyzing. We're definitely out now. We're getting a pullback. Again, you're not looking to short. No, because this was your cross. So you're not looking to short, pulled back, gold's closed below that. We don't care right now. The MACD at the bottom is what we're looking at for our confirmation. So no matter how far it moves short, we're not getting in until we get a blue cross like this down here after it's this 200 EMA. Okay. So right there is a cross. Do you get in on that? This is kinda tricky. Our rules say that if we are above the 200 EMA and we get a cross where the blue crosses the orange, we go along. And ignore that I've got this. Ignore I've got that horizontal line there. Do you get in long there? According to our rules, you get in long. It's only 10:30 in the morning. What's your other rule on time base? When do you trade? Do you trade from 8 AM to 11? Well, we'd still take it long. What are we doing with this trade? We taking it long? Remember that the cross is near the center line. Don't expect it to go very far, okay? And the cross is actually above. That's okay. We just don't expect it to go long. So we're gonna go ahead and buy 3. The one thing I don't like is that the candle's been red is red. Where are you gonna draw your stop? You can't use stop off the current candle. We're at the low. You have to use the previous. A little wider stop. I don't like that this candle's not green. You know I'm big on entering on colored candle. If I look to go long, I like to see a green candle. That's one thing I don't like on this one. Not out. Still not out. Now we said 3 candle close. So are you 3 candle closing this one? Another decision to make. And as you back test, this is something that's important. Well, we didn't have a green candle, so you know Butch would not have taken that. I don't care what the MACD says, and I don't care that gold's above the 200. If I would have been looking to go long, I have to have a green candle. I'm not gonna enter on a red candle. Like, that's just me. There it goes up. So you're not out. You had a wider stop. You're up a little, but this is where you're going to get into a lot of second guessing. And we actually had another cross here that was green that I did not mark, which is right where we're at. So, was that a good entry? Not as we look back, hindsight, okay? Red candle. I don't like taking longs on a red candle. I don't go just off price solely. Going off price solely would be taking it because that MACD crossed. I'm trusting that, and this is price based, okay? The MACD, this blue line only moved up through here and crossed because of this move. It's totally reactive to price, okay? So again, that push up through and crossing over only happened because of this move up. So I would not have got in there. Okay. So where I would have wanted to get in was here. You have a cross. That's not really a cross. There's no gap in between the blue and the right there and the orange. So that's really your cross. So this would have been where I would have wanna enter, okay, but we're already in, so we're gonna let that tick over, and I'm only gonna go with that one hand, okay? Oh, no, I need to go with 2, 3, sorry. That's the 3rd candle from this entry. So we have to shave a little bit off. Looks like I'm up $105, $75 risk. Would our risk have been there? No, because where I would have entered here on this 2nd signal, my stop would have been, uh, entry would have been there. Stop would have been below the candle. It's decent size enough, or you could have went back below this one. So, and I would, like here, if I would have got in here, our entry would have been here, that would have been probably about a $45 risk, okay? Because right now, this is about 40 off of that. So, both traders are in. Even if you got in on the red, okay, you would still be in if you left it all run, okay? So, how would you have handled this trade right here? Big decision. 3 candle close, 1, 2, 3, you were out. You were out. You closed at a loss. There's no denying that. And then you couldn't really move your stop to break even. You would have had to left your stop where it was, 3 candle close, left your stop where it was on your runner. That would have been down already. But then the runner actually paid off, okay? So, we stick to the same rules. 3 candle close, 1, 2, 3, you would have closed. 2, what does that do for you? If you would have closed 2 there, what that does is limit your risk. If you had your stop loss here, you would have lost $72 on the 3 contract. So it pulled back. You closed out 2. What did you just do? You limited your loss. You lowered your loss. And if you would have closed all 3, you would have lowered your loss. But if you closed just 2 and left your runner go because you're following the MACD signal, then it stayed the game. Your runner would have played out. Okay. So me, I'm entering on that because that is a green candle. I like to see a green candle when I signal, green candle went across, boom, I'm in. My stop would have been below this low here, this candle, and 3 candle close. This is where I'd be closing out. So unfortunately, when I close 2 of these, it's gonna simulate me getting in back here, off this price point, and it's not. This is where I didn't. So we have to shave off some of the profit that I'm getting ready to lock in on that. But again, we're gonna go down to 2, close 2, stop to break even, and then we'll manage our stop. If it makes an extension up, I'd like to see a good push, which it never does yet. Then we've got a red candle. So as far as moving, uh, stop, where would you move your stop? Here it kinda made a low, you move your stop in there. Again, those rules are up to you. It made an extension up, made a pullback. It just never really, I mean, it kinda pushed up a little bit, so you can call that an extension up, just not that great, and moved your stop here, well, then that's where you would have done it. So it depends on where you would move your stop. That's where the cross happened, again, on the MACD, so we're assuming a pullback. There we're out. So that's it. So here is our, win rate on this. 75% win rate. I don't know why that's showing 75% because I believe on all of our, um, runners, we got stopped out at break even. So I don't know why that. Um, we didn't take any losses, I don't believe. I'd have to look back through. We can open the performance report. But right there is $282. Again, take off a 0 because, if you were trading with 3 micros, $282 on the day on 3 micros, in and out, you're out quickly. That's something to notice. We got out 3 candles after getting the MACD signaled to get in long across. We're above the 200 EMA. We're closing in 3 candles. That's it. That's your rule. Do it. Closing in 3 candles. 1, 2, 3. 9 minutes. You have to wait 9 minutes to close. I know it shouldn't be as painful as waiting an hour to close or 2 hours to close or 3 hours to close. If gold takes off and starts running, then you'll have a runner on. That's the whole purpose of this. Don't look back at this and go, "Well, we got 282. If I would have closed out just all 3, then I would have made more." Yes, you would have. If you would have closed out all 3 contracts, then you would have made more, okay? But what you're trying to do is leave a runner on in case something breaks and runs. It just so happened that gold did not break and run today. We know why. Gold's at all-time highs. So it should be no surprise that gold did not break and run. So don't look back and say, "Well, now today, I would have just closed all 3 and made more money." And yes, you would have. However, if you close all 3 like that, and can you picture gold breaking and running to the new all-time high, and you're not in it? Your runner's not in it because you don't have a runner because you closed all 3. So you can't say, "I wanna do it this way now." You can't look back and go, "Well, no, I wouldn't have left any runners." You can't look back at what we just did and say, "I wouldn't have left any runners today. Look at it," because it's easy to look back and say that. So you can't look back and say, "Well, today I would not have left a runner. I would have just closed all 3 every time. 3 candle close, I like that. I'm gonna close all 3 contracts," because then you'd have to do it tomorrow and the next day and the next day. And if that's what you wanna do, that's fine, but you won't have a runner on. So the whole goal is because sometimes these runners you guys just saw a gold runner for me last week that I got in last Wednesday at 10 AM. That was a gold runner. It was just a full 20 size contracts. I did not close partial on it, okay? But that could have been a runner for you, where you could have made 5, 600, $1,000 just on the runner, okay, depending on what you had on. That's what you're going for by leaving the runner. So far it was a good, thing. I don't know why it says there's our I don't see any pullback. It says 75% winner, and I don't know why. Guys, I have no idea why it says 75% oh, I know why. Sorry. Okay, 75% profitable. That's because we closed out partial in profit, but we moved our stops to break even. So we didn't gain anything on our, um, last contract, okay? So if we woulda just locked in like 1, if we'd have went just to lock in like 1 above break even, so just pull it 1 above break even, you would have seen 100% trade rate on here, profit rate, okay? But that's why it shows 75 because we moved all of our stops to break even on and these platforms look at the running trade as a separate trade, the runner. It's a separate trade. So when we close out 2, that's 1 trade. When the last one gets closed out, that is a separate trade, is how the platforms look at it. So that's why it shows that. But if you look at the equity curve, nothing but up. That's what you wanna see, nothing but up, okay? Alright. So anyways, I hope you like this, guys. Again, take these rules, make these rules. Again, you can also adapt the rule of when you see we're looking to buy when the blue crosses over from lower to higher, crosses above the orange to get in. When blue crosses below the orange, then that's an indication that it is pulling back. So it can either do a full pullback like this, or like we saw earlier, it could just move sideways. So you can use that as an indication to get out of the trade. So if that's the case, you would have actually closed the trade on that on your runner. I'm not using that in this example, but that is something you can do. So as you look back, what you want to do is look back. Where did we get taken out? Well, we got taken out here. Our sell order right here, that last runner that we got in on the entry got taken out on this pullback. So if we would have closed here when this crossed, we would have locked in more gain. Okay. So go back to this one. Okay. You stayed in with your runner. Well, we got stopped out because we moved our stop to break even. If you would have left your stop where it was, would you have stayed in the game? Yes, you would have. If you would have closed when it crossed the opposite way here to sell, would you have locked in more? Yes, you would have locked in from that price point to your entry, so you would have locked in more gain. What about here? We got stopped out here because we didn't move our stop any tighter. Here's the moving average cross back down, telling us possible reversal, pullback, I mean. So uh, you would have closed out here. You would have uh, locked in the gain from there. So you would have locked in a little bit more. Here's where we got out when it pulled down. So we probably got out here. I think that's where our stop was. So we actually would have locked in a little more. So as you look back, this one, no. I don't well, maybe. Here's your cross, possible pullback. We got stopped out here. Yes, you would have locked in a little more gains if you would have used that as your exit. This one here, here's your cross pullback. That would have been your close. So we were already pulled out here because we moved your stop. If you to break even, which was here. So if you didn't move your stop to break even, then you would have actually lost a little more on that. So again, that's something you have to analyze. What about here? Cross here, closed trade. It just says closed trade. Now we got closed out because we moved our stop here to break even. Or sorry, our entry was here. So we moved our stop to break even and got closed out here. Okay, if we would have left our stop and used this signal, this pullback signal, then yes, we would have locked in, a little bit of gains on there. So that's how you want to do that is look back through and test. I hope you enjoyed this. I'm going to try and get this out on the internet real quick, and I will talk to you later.